Hello guys, welcome back to another video, and what we're going to be looking today, it's particularly interesting because what is happening right now, and you maybe not even knowing that is happening, but it's in front of your eyes. It's one of the best opportunities for 2025, and it is, I'm going to tell you right at before you subscribe to the channel, give us a thumbs up and share this content with your friend, and join us on the Telegram group as well, because tonight, this afternoon, we're going to be having the webinar from 5 to 6 p.m. and I'm going to dive a little bit more deep onto the week ahead and what we should be looking to trade. Okay, so make sure to be there 5 to 6 p.m. in Australia time. Okay, coming back. So what is the best opportunity in my opinion for now? And this is short USD JPY. But Luca, didn't you tell us that US dollar is strong and that the Japanese yen hasn't been raising rates? Why should we short USD JPY? For a simple reason. The economy on Japan is sort of heating up, as well as the ideas from the Bank of Japan are getting slightly more hawkish. And with the ideas more hawkish means that they will continue to increase the rates. If you think about what has been happening globally, okay, last year, 2024, we started the easing cycle of the central banks. So US, BOC, BOE, ECB, all the other central banks have started to ease the monetary policy, ease the rates. So what happened with Japan? The Bank of Japan didn't ease the rates because they couldn't, right? They were negative already. So there was a simple thing that they were waiting for. Inflation to grow, economy to heat it up, so basically GDP being stronger than expected, be showing signs of strength, as well as salary, labor market, and the whole other economic indicators. Well, guess what? This happened and is happening. So the GDP yesterday from Japan, the quarter-over-quarter, came in to be 0.7%. I touched base on that yesterday. So, and the consensus was 0.3%, and the previous they revised it up to 0.4. So showing to me that yes, the GDP, the inflation, and everything else in Japan is increasing. Not, hugely increasing, but it's going step by step, and that's what it matters. Because with that, the Bank of Japan can continue to increase the monetary policy, so increase the rates. 25 by 25, it's 50, by 25, 75, by 25, 1%. So soon or later, they will be on a very, very positive, more than 2 to 3% into the rates. Okay, between 2 to 3% into the rates on that target range for the rate. Now, what has to do with US, Japan, and why should we look at to short USD JPY? USA is easing. USA is cutting the rates. FMC, the Fed, all the comments that they do is neutral to dovish. There are some hawkish comments, but the main reason is inflation is coming down, the labor market is still sustainable, and they will continue to cut. I expected another 25 basis points cut for this year. So there is expectation of a cut, another easing. As of the Bank of Japan keeps hiking, and there are expectations of a higher monetary policy. So piece that together. Remember what I always say, fundamentals is about understanding how can that impact and where should you express that opportunity into the market, via stocks, via CFDs on Forex, via commodities. I don't know, just depends. In this situation, short USD JPY is the best case scenario because we're going to have more money fly into Japan, more money getting out from US, putting on Japan yields, higher yields, the GDP 10 years or whatever, and making the currency more attractive. So basically the carry trade is over because the Japan was on a ZIRP, so zero interest rates policy, and now it's on a PIP, so positive interest rates policy. And that pretty much shows to me that they will continue to, and therefore USD JPY will be looking to go down. I have an open position on USD JPY. It's a small trade, not too big, and my TP is at 150, okay? There is potential to go lower, 110%. There is always potential to go lower, as there is potential to, everything I just say doesn't make any sense to you, and the market continues to go up. So use risk management. This is not a trade recommendation, this is a trade idea, so make sure to understand the difference. Now, we have tomorrow the RBNZ. The RBNZ is the Reserve Bank of New Zealand. Is pretty much the Fed from New Zealand. And they are looking to cut 50 basis points cut. So they're looking to cut 50 basis points. In my opinion, the New Zealand dollar will be weakened. Okay, will be weakening for the next 2 weeks, or sorry, a week and a half, because this month has only another week. And pretty much the Canadian dollar against the New Zealand dollar would be strong, okay? With Trump in power, yes, Canada has the 25% tariffs, but if we pair it up with an even weaker currency like the New Zealand dollar, I think NZD CAD would be a good short coming up for tomorrow. We have the consensus at 3.75% for tomorrow. If anything comes up to be higher, New Zealand dollar can be stronger. If anything comes up to be lower, New Zealand dollar can be very, 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 very weak. All right. And if it comes as expected, then we have to look at the minutes and the rate statement, and the press conference, and that's what it will matter the most for the New Zealand dollar. Now you know how to trade USD JPY and how to trade the New Zealand dollar. And if you have any questions, put down in the comments, and I will definitely be looking to answer those once I have a time. And make sure to join me tonight from 5 to 6 p.m. because the content I deliver there, it's free, we don't charge you anything. The only thing you need to do is go into the description, join the Telegram group, and wait for 5 p.m. in Australia time. I see you tonight, or I see you in the next video. See you guys, bye bye.